XRP rallied by over 5% yesterday, breaking through some of its previous areas of resistance. Is this going to continue, or are we now going to start to see a bit of a cooling off in the price action? In today's video, I'm going to be taking a look at the price action of XRP on the 1 hour and 1 day timeframes, sharing my thoughts and opinions as to where I think the price action is heading. Guys, as I get into it, smash the like button if you're new, subscribe, and let's jump right down into the charts. So here we have XRP paired up with USDT, and we are on the 1 hour Binance chart here. So we were looking at rejection initially yesterday, okay, right here on the 50 EMA, 50 SMA, and we didn't get confirmation of this. We were hoping that we'd see confirmation, but we just couldn't see two red candles coming in here, showing us that we were likely to move to the downside. Now, we've had this potential here, okay, on this rejection, this first candle, and then we got a dojo candle indicating that the market just didn't know where to go and take the price action. This was followed by a red market, and we did move down a little ways, and we were hoping to close that red so that we could short the market. Unfortunately, we actually pushed up right up into the 50 EMA, 50 SMA, and you can see here that there were essentially two candles that were eventually green above the clean breakout above the 50 EMA, 50 SMA, and that would have been our long opportunity right about here. Okay, we would have basically gone in on a long right in this particular area, and we would have looked for 1.5 risk reward ratio, so stop loss. We would have wanted it down here, but we couldn't necessarily have done that, so we would have had to have tried to put in a stop loss on the previous level of support and targeted out the 200 EMA. Okay, this would have been approximately a 1.82 risk reward ratio, so we probably could have given it a little bit more depth to the stop loss, but essentially here you can see it would have hit profit and not a problem. Now, the 200 EMA, of course, on the hourly chart is, of course, the resistance. Okay, this is where resistance is on XRP at the moment. Now, again, we're waiting to see whether this candle right now closes red. If we can see that there, then of course we can see that this was a clean rejection from our EMA. But as we can see, there's also this candle. The market just couldn't decide either. It basically opened and closed in the same area, but it of course doesn't really have a tail to this body or anything like that. So it's an interesting candle that I'm not all that keen on seeing. I'm looking to see whether or not we can get a closed position lower than the previous wick here in the next kind of few minutes or so, hour or so. And once we have that, we'll then be able to see whether or not this is a clean rejection from our 200 EMA, and here we could potentially go short. Of course, if this is the case, and let's hypothetically say that this is where the candle closes, just to around maybe this range of 56.49 hypothetically, our stop loss has to be up there, higher than the previous swing high, so 57.26, and we are going to be looking to take profit on a previous area of support if possible. Okay, so we're going to be looking at coming down a ways here, but the risk reward ratio I'm looking for is 1.5 minimum. You guys know that by now, and this doesn't look like a great opportunity, so I'm probably going to avoid shorting on XRP and look for other opportunities outside the market, because it's still a little bit undecided. Are we going to come all the way back down into this range? It's possible. This is a previous area of support for XRP, so the price action may come down to the 55.15 to 55.45. Okay, it's a possible range, but we have to get them lower than the 50 EMA, 50 SMA. And if we can't do that and we find those as support, for example, the risks do not outweigh the rewards. Okay, we're less than half a point here, so not worth it in my opinion. So we'll keep an eye on XRP. We'll see on the short time frame whether there's a trading opportunity. Like always, it's possible to have a breakout above the 200 EMA, right? So it could be that we get confirmed breakout here and we actually end up going long with a tight stop loss and take profit a little bit higher, getting our 1.5 risk reward ratio. So there's opportunities here, but what I'm saying essentially is that there isn't a lot of data here to kind of say it's worth going short, or that we definitely haven't got any confirmation of going long yet. So ultimately we have to sit tight, wait. Obviously, if we did trade this breakout from the 50 EMA, 50 SMA, we found the rejection here. Now you're sitting on your hands waiting for that next move. That's not a bad thing, because sometimes the best trade is no trade. Essentially, you don't want to be gambling just for the sake of being in any trades. So just keep an eye on the market here, and we'll see how it kind of plays out. In terms of where this would potentially going, well, we can see here, this to me looks like a complete zigzag pattern, okay? And so what we will be looking for next essentially will be a break to the downside in another pattern. So that's kind of what we're looking for. But we have hit higher than the 1.382. So I want to be a little bit cautious at the idea of maybe a double zigzag or triple zigzag patterns playing out. Now, obviously, we have a double top situation playing out over here as well. We can see that right right inside here. We actually wicked up just a little bit higher, but I would say that's within tolerance and a clean rejection of that double top. If we go ahead and actually bring in a yellow box on that area there, you can see between 57.04 and 57.21 and a clean rejection of this range of resistance with a wick high coming in at the 57.24. So this area is an area of resistance that we have been rejected from. So a double top is a bearish situation to be in as well. So we'll keep an eye on that. It's possible that we have retracement. Now, typically a retracement goes down to equilibrium. So we'll check our smart money concepts. Equilibrium is right on that 50 EMA, right inside here, as you can see. Okay, that's a 50% level between the swing low and the swing high. So a retracement could be in that particular range. Now, if I go ahead and place a short position on its current market value, stop loss higher than its previous swing high, and target out equilibrium, you can still see it doesn't meet my minimum requirements of 1.5. So still, even though we know that we're likely to find support on the 50 SMA, the yellow line, down at equilibrium, which is 50% fib level between the discount and the premium ranging, or the swing low and the swing high, everything here tells us that we're likely to have a bit of a cooling off before we move to the upside, but there's another move to the upside, and that is potentially the opportunity. So if we do come off and cool off and come down in towards equilibrium, find support in that 50 EMA, the other opportunity here will be to be a long. Tight stop loss, lower than the previous swing low, which may be dictated by wherever this wick comes down. And then, of course, we'll target back out on that 200 EMA. This one's got a really good risk-reward ratio, potentially, of around 3.3 or higher. So that might be a really good play. So for me, I'm looking at XRP through the lens of only going long rather than going short. I think we either have a breakout above the 200 EMA, we go long there, or we cool off, we pull back to the equilibrium, find support on the 50 SMA, and we go long there, and we target out another resistance batch on the 200 EMA, and maybe we'll even ride it higher, get a confirmed breakout after that. So it looks to me like long positions are better from a risk reward point of view, and from a risk tolerance point of view, longs are better than shorts on the hourly chart. So lots of things to kind of think about on XRP's price action. Interesting move to the upside with Bitcoin and the rest of the crypto market, but we aren't out of the woods just yet. If we roll this up into our daily time frame, of course, what we are talking about is that still that move to the downside for 50 to 53 cents before we get into that breakout for the 85 or 75 to 85 cents. All of that is still very much valid. And I did find some interesting comments in yesterday's video around Bitcoin's price action and how I am both calling a breakdown and a breakout in the same video. And this is because a lot of people don't understand or appreciate the different time frames and the different approaches that you have to have on different time frames. It's quite possible to just be sat on a daily time frame and hold a position in a long position for weeks upon weeks upon weeks, right? You can do that. It's going to be quite costly because, ultimately you're going to hold a position open for a very significant period of time. And you're not really going to care too much about the volatility to the downside so much. But if you take a look at the smaller time frames, actually, we are looking for cooling off. We are looking for relief rallies at times, and then we're looking for pulls to the downside. But one thing that is very consistent is that we're looking for gradual pulls to the downside over a period of time that are actually a part of the bigger macro picture to the upside anyway. Okay, so understanding how these things are built is crucial. And yes, I am going to be sat here and I'm going to be telling you that we are going to be going down to be going up later, because that is how the market works. The market doesn't just move in one direction. The market moves in multiple, right? It goes up, it goes down, it goes sideways, but it definitely doesn't go backwards, right? So it's very important that we understand that market is more than likely going to be cooling off at some point, and we are likely to see this test of the lower trend line before we get up into that 75 to 85 cent. I would love to be wrong on that though. As I said many times before, I'd love us to break straight up towards 75 cent. But of course, that is going to then mean that we're going to have completely breakdown out of this structure. More than likely or not, at some point, we're going to lose 50 cent and we're going to be testing those lower ranges once again, because completing this structure to the upside, although great, is a part of a bigger macro collapse to the downside anyway. So we want to be really, really aware that although, we all want green in the market, actually, we kind of don't want to over egg things just yet, because I think 2025 is really where the bigger positions, the bigger long positions, the more profitable trades are likely to be. So appreciate all of the volatility, because huge money can be made from leverage-based trading on the smaller timeframes, taking advantage of all the liquidity that is being extracted from the market. And of course, on the part of the bigger macro pieces, we can enjoy the larger swing trades from spot buys, buy XRP, hold it for a while, sell it at 75, 85 cent, buy it back, later, and so forth. But one of the things that's that's really important here, and one of the things that I need to stress to everybody, is that you cannot and should not, at least cannot, but you shouldn't, in my opinion anyway, because I'm not a financial advisor, I can only tell you what I would do, is not mix my bags, right? I have a trade bag, which might be leverage, right? I might even have another bag, which is basically just your swing trading bag, and then there's a hodl bag, right? Do not mix those things. If you mix those things, it's a recipe for disaster, right? It's the same as like going and putting all your crypto on an exchange, doing some leverage-based trades at 100, 200x, and then using cross leverage rather than isolated leverage, right? These are fundamental things you just simply shouldn't be doing, right? At least in my opinion. From my point of view, I have a leverage trade position bags, right? And I have multiple of those on different exchanges for different pairs. So, I've got a 𝗕𝗘𝗪𝗏 one, I've got a 𝗕𝗓𝗏 one, 𝗕𝗘𝗪𝗏, and so forth. And if you haven't yet got account for the accounts on these exchanges, guys, check out the links in the description. Some fantastic sign-up bonuses and some discounts available to people who use those links in the description, right? And by having access to all those exchanges on leverage, then that's fine. I get lots of different kind of options, right? And again, spot positions as well. Those are more in the ledger devices, right? Putting them into a ledger device is really important because it's not on an exchange. You're not opening to yourself to those risks. And there's I also have a cold storage device, right? Where I put all of my long-term hodl positions into. These are really important things, right? If you're going to be trading XRP on a day-by-day basis, trying to be a day trader, trying to leverage trade, then obviously make sure you're not doing that with your hodl bags. And I can't stress that enough. So for XRP's price action, yeah, we've seen some really interesting things going on. All of this is a part of a much bigger play, though. As I've said many times before, nothing much has really changed. We are still looking for these bigger breaks to the upside, and everything that is happening and everything that has happened since the lows of 2022 is just a precursor to 2025. And I know a lot of people maybe say, and talk about, extreme price predictions and all that kind of stuff for XRP and for various different altcoins. And, they're all great to have all of these things, but I think the most important message to kind of put out there is that you can't expect these gains to be instantaneous. There's a process that everything has to go through, and there's a lot of complexities to it, everything from supply through to demand, whether 1 billion tokens just gets unlocked from Ripple's escrow, whether or not 900 million of that is going to go back into escrow, or is it all going to flood the market even though there is insufficient demand to actually soak up the supply. There's a lot of complexities to price movement. Understanding them is critically important. What we don't want to do is get too caught up on things like market cap and price action without understanding the fundamental basics first. But if you want to know more, why don't you join us in our free Discord server linked in the description, or check out this video right here where we go through a bit more of the basics when it comes to crypto.